Okay, let's go over on, it's the crude oil chart by changing to the S&P 500 Gerald. Okay, first of all, we had a great sell signal on the S&P 500 up here, all right? When the moving averages are down, sell the first test of high value area. There you are, high value, had some confluence there. Caught the high in the S&P just above 2104. All right, got as low as 2096 so far. Then it broke the continuation control, retested another entry point right there if you want it. Obviously, the largest, the most highest probability trade to be high value area. But I want to focus on this one, this last trade that came up. This is such a gorgeous setup, and I want to show you why. And this works like on all markets right across the board. I don't care if you trade stocks, if you trade currency, Forex, or futures. You see these 2 points where it bounced earlier? Right here you bounce. Here you bounce. This actually got rejected off of LVA. If you get rejected off of low value area in a downtrend, low value being green, high value being red. So the methodology states that we sell high value on the first test. We never buy green or low value in a downtrend. The rule of thumb, or the methodology, states this. If I'm in a downtrend, I sell the first test of high value within 2 ticks, negative market delta. When it comes down to low value area, I never buy green. I let green break, let it retest, right? So you're not buying here green when you're in a downtrend. You want it to bounce, though. Because if it bounces, you have what's called a rejected area. These are 2 rejected areas. Same exact price point in time. The rule of thumb is this in trading. It's been this way for a long, long time in the market, ever since I've been trading the markets, since the late 80s, early 90s. Old support becomes new resistance. Old resistance becomes new support. Never forget that, especially with market profile. It's called a rejected area. It got rejected and went up against trend. Got rejected, went up against trend. So that alerts me if I ever break that area and I retest that rejected area and it's on market profile, which it was, then that lets me know that's a high probability short. And sure enough, my system just absolutely nailed it. It broke down, retested the rejected area, almost right to the tick. Got a huge market delta sell right at 2110, just above it, 2110 and a quarter, and then she just dropped straight down for a nice little move down to the downside. So that's called a rejected sell on profile. So it's been pretty much one directional on the S&P this morning. It's been one here, and one here. This is a rejected trade that you never want to forget, though. It's a really, really great trade. Rejected areas, you want them, if you're in a downtrend, you want the market to bounce off a low value area. You're begging for it. Because what it does, it catches all these wrongly positioned traders that have their stops right below these lows. So once you get below these lows, that's exactly when you're going to pop out the trade. All right, one sec, guys and gals. So what we're doing here is that we like to break, retest, like to see a break, like to see a retest, and there you go. But your biggest trade is going to be in a downtrend. You're trying to sell high value area. That's what you're trying to do. You're trying to sell high value. That's the whole goal in a downtrend. Our trend filter's down, sell high value. That's almost a 2104 was a top, 29.6, 29.6. That's a huge move in the S&P 500. Just a nice little directional move in the S&P 500. But those are your sell points. Remember, you're not buying, you're selling. Sell point, sell point, sell point. Okay? If you look what's happened on crude here recently, the only inflection points you had on crude this morning are a few of them. You had the high here on a second test trade. If you wanted, some of you got on it. That is a test right there, high value area test. First test of this area, second test. First test of HVA, second test of the area. The next hot spot that I wanted is this guy right here. Break 72, 73, retest. And then this one finally got our target. Here's your break. Your retracement trade up to our continuation dots. Came within 2 ticks. Negative market delta of 657. 457 as far as that one goes. Okay, so no matter what market you trade, you want to trade off. The whole goal, guys and gals, is you want to try to sell high value in a downtrend, and then you want to see LVA break retest or retest of the blue. It doesn't matter what market you look at. It's the same exact market. You look at the S&P, it's the same exact scenario. You're trying to sell high value. You're trying to break retest. This is a break retest of low value and a retest of my blue continuation. That was a confluence trade. That is just a no-brainer. If trades could set up like this right here on all markets, on every trade, man, I tell you, it'd just be easy pickings because you just got great rejected level that teaches us and educates us that we know we got the rolling position traders that got caught. When it breaks, look for the retest. These rejected trades, never forget about them. But that's a rhythm. Downtrend, sell high value, let low value area break retest. That's what we want. This is what we want. That's what we want right there. Right there. Sell high value, break retest. Look at